Hi, there is another important term in financial accounting which is liabilities. Now, we talked about the assets which is company owns, and in terms of the current and non-current they have different kind of assets. Similarly, the liabilities is the financial obligation that an organization owes to the different external parties. Now, these obligations in terms of money, they have to pay back, which they have taken from them. So it could be a loan, it could be to run or establish a business, they have taken a loan from the banks, they have to give it back. So that is their liability. To run their operations, again, for a telecom company, they have to run their networks, they have to spend some money in that, they have some cost which they need to pay for utilities, for rent, for operations. So that is their liability. Now this liability could be of, again, two types as what we have seen in assets. It could be a current liability, it could be non-current liability. Similarly, it all depends upon when they have to pay it back. So if they have to pay back the liabilities within 1 year, that is their current liabilities. If they have to pay it back beyond 1 year, that is a non-current liability. We'll understand these different current and non-current liabilities in the subsequent slides. The current liability is, we understood, this is the obligation company owes to the different external parties, including the banks. They have to settle it within a year. Now, it could be related to other things also. If it could be they are running or establishing a business, and they have to put up new devices, equipments, or they have to pay for running those equipments also. So that is something which they owe to the external parties, to the suppliers, to the vendors, to run the business, to run the operations. In that case, it is the accounts payable. They have to pay it back to the suppliers. On the other side, they have certain costs related to utilities, related to rent of the offices which they own. So that is again the cost they have to bear. They have to pay within a year. They have some short-term debt. They have taken some loan from the financial institutions which they have to pay back within 3, 6, 9, 12 months. That is again their current liability. Now they have some deferred revenue, which revenue they received in advance from different consumers for different services. Maybe they prepaid it. Now they have to give the services. In that case, there is some deferred revenue which is to be considered. That is their liability. Yeah, they have to pay it back to the consumers. So there are these different liabilities combined together, which needs to be paid in a year, is called as a current liabilities.